Is Florida's sunny real estate dream turning into a slow-motion disaster? In 2025, many cities across the Sunshine State are no longer booming, they're bleeding. Empty streets, for sale signs gathering dust, and neighborhoods that once felt vibrant now feel like warning signs. From the Gulf Coast to inland suburbs, housing prices are falling, insurance costs are exploding, and buyers, they've vanished. These are 10 Florida cities quietly turning into ghost towns, and we're starting at the bottom of the list. Number 10. Port Charlotte. Once known as one of Florida's best-kept secrets, Port Charlotte offered breezy waterfront living without the chaos of big city life. But in 2025, that charm is fading fast. A drive-through town tells the story, rows of homes sitting unsold. Days on market are now stretching past 90 days, a sharp contrast to the week-long sellouts during the pandemic boom. Prices are in freefall too. The median home value dropped from $333,242.00 in 2022 to just $285,719.00 today, a 14.2% plunge. That's not just a dip, that's equity being wiped out for thousands. And then there's the insurance crisis. Some residents are paying $7,000.00 to $9,000.00 a year, sometimes more than their mortgage. For many families and retirees, it's become unaffordable. To make matters worse, overbuilding during the boom years left entire subdivisions half empty. Some new homes were even abandoned mid-construction after financing deals collapsed. Port Charlotte is no longer a hidden gem. It's a cautionary tale. Unless demand returns or insurance stabilizes, this could become one of Florida's most visible housing crash zones. Number 9. Cape Coral. Cape Coral was once the poster child of Florida's housing boom. Back in 2021 and 2022, it felt like everyone wanted a piece of this Gulf Coast paradise. Investors, retirees, remote workers. The city exploded with new development, and home prices followed. At its peak, the median home price hit $424,767.00. But now in 2025, the party's over. Today, that median price has dropped to $361,761.00, a loss of over $63,000.00, or nearly 15%. And some neighborhoods are seeing even steeper cuts. It's not just a cooling market, it's a sharp reversal. So what went wrong? For starters, investor panic. A huge chunk of homes, over 25% of listings, are now owned by flippers or landlords looking to exit fast. Many bought high and now they're racing to sell before values fall further. When they cut prices, the rest of the market follows. But the bigger issue is inventory. In just a year, the number of active listings in Cape Coral has nearly doubled. Builders overestimated demand and pumped out homes like crazy. Now, many of those properties are sitting empty, or worse, being canceled halfway through construction. And let's talk insurance. After Hurricane Ian devastated the region in 2022, insurance premiums went through the roof. Some Cape Coral residents are now paying $6,000.00 to $10,000.00 a year just to stay covered. That's a second mortgage, and it's driving people out. Cape Coral still has sunshine and canals, but the numbers are turning dark. With soaring inventory, falling prices, and mounting insurance burdens, the city's housing market is flashing red. In 2025, it's becoming one of Florida's biggest real estate caution zones. Number 8. Northport. Northport was once the rising star of Florida's pandemic migration wave. With remote work booming, this city drew in buyers from all over: retirees, young families, digital nomads. In 2022, home prices shot up to $379,254.00, making it one of the fastest-growing markets in the state. But just 3 years later, things look very different. In 2025, the median home price in Northport has fallen to $321,224.00. That's a $58,000.00 drop, or about 15.3% off the peak. For many who bought during the frenzy, they're now underwater, stuck with homes worth less than their mortgage. The problem? Overbuilding. Entire subdivisions were rushed into development, expecting endless demand. But now, many of those homes are sitting empty. The for sale signs aren't moving. Some neighborhoods feel frozen in time. Making matters worse, pending sales are collapsing. Over 30% of deals fell through just last quarter, mainly because of stricter lending, higher down payments, and tighter credit requirements. Buyers are getting cold feet or simply don't qualify anymore. Foreclosure filings have also spiked, up 60% year over year. Homeowners are struggling to keep up with payments, especially with rising insurance premiums and sudden HOA hikes. And the market has slowed to a crawl. Homes that used to sell in weeks now sit for 90-plus days, and that number keeps climbing. Northport isn't a ghost town yet, but the warning signs are everywhere, and if things keep trending this way, it could soon join Florida's growing list of housing bust cities. Number 7. Palm Bay. Palm Bay used to be one of Florida's quiet real estate wins, affordable, laid back, and just far enough from the chaos. In 2022, the median home value sat at $328,035, making it a popular choice for working-class families and budget-conscious buyers. But in 2025, things aren't looking so calm. Home prices have dipped to $312,342.00, a modest $15,000.00 drop, but the real problems are hidden below the surface. One major issue? The Airbnb investor exit. During the boom, short-term rentals exploded in Palm Bay. Now, new regulations and an oversaturated market have flipped the script. Hosts are dumping their properties. Fast. That investor sell-off is adding pressure to a market already struggling with affordability. The price-to-rent ratio here is completely out of sync. Renters are paying around $1,700.00 a month, while home prices still hover above $300.00, with mortgage rates between 7% and 8%. Owning just doesn't make sense, especially for first-time buyers. Loan approvals are getting tougher too. Many families simply can't qualify anymore. And the result? Homes are sitting. The average listing now takes over 85 days to sell, nearly triple the time it took just 2 years ago. Even the rental market is weakening. Landlords are cutting rents just to fill units. That's a bad sign for stability. Palm Bay isn't collapsing overnight, but the cracks are forming. Investor confidence is falling, buyer demand is soft, and the days of fast flips and bidding wars feel long gone. Number 6. Port St. Lucie. Port St. Lucie used to be one of Florida's most dependable family cities, clean, safe, and steadily growing. In 2022, that growth went into overdrive. Home prices surged to $405,010.00, driven by out-of-state buyers and remote workers eager for suburban life. But in 2025, that momentum is stalling. The median home price has dropped to $375,513.00, a $29,497.00 dip. On paper, that might not seem dramatic, but the underlying signals are far more troubling. Buyer demand has collapsed. The wave of people moving in from other states has slowed to a trickle, and the bidding wars that once defined this market, gone. Sellers are now offering mortgage rate buy-downs, closing credits, even slashing prices, just to get someone through the door. Pending sales are falling apart too. Nearly 1 in 3 deals in Port St. Lucie failed to close last year, a huge spike. Whether it's financing rejections, low appraisals, or buyer hesitation, the pipeline is breaking down. And then there are the rising HOA fees. In many newer communities, monthly dues have jumped from around $80.00 to over $200.00 to cover storm repairs and insurance increases. That's pushing affordability out of reach for many middle-class families. Homes that once sold in 24 days now linger on the market for 65-plus days, and the climb isn't slowing. Port St. Lucie isn't in freefall yet, but the early indicators are flashing bright red. If rates don't drop or demand doesn't rebound, the slowdown could turn into something much worse. Number 5. Poinciana. Poinciana was once a dream for first-time buyers. Affordable homes, quiet neighborhoods, and just close enough to Orlando to commute. In 2022, the median home price hit $322,450.00, and demand was strong across the board. But in 2025, affordability has turned into a trap. Home values have dropped to $290,655.00, a sharp 9.7% decline. But more alarming is what's happening behind the scenes. The biggest red flag? Insurance costs are now higher than some mortgages. In flood or storm-prone zones, monthly premiums have soared to $500.00, $800.00, turning homeownership into a losing equation. For many, the math just doesn't work anymore. Landlords are feeling it too. Investors who once saw Poinciana as a rental goldmine are now struggling to stay afloat. Rents haven't kept up with costs and vacancies are rising. Some landlords are slashing prices or offering free months just to fill units. Then there's the tax side. Local property tax assessments are actually being revised downward, a rare and worrying sign that city officials see the value slide as long-term. HOAs aren't helping either. Some neighborhoods hit with storm damage or infrastructure costs have passed special assessments in the thousands, leaving owners scrambling to cover surprise bills. Homes now take over 70 days to sell, up from just a few weeks during the peak. What made Poinciana appealing was low cost. But in 2025, the costs are high, the value is shrinking, and the once busy streets are starting to fall quiet. Number 4. Deltona. Deltona used to be the perfect middle ground, close to Orlando, a short drive to the beach, and still relatively affordable. Back in 2022, homes averaged $340,178.00. For many working families, it was a quiet win in the middle of the madness. But now, in 2025, that piece is cracking. Prices have slipped to $298,655.00, a $41,500.00 drop, or about 12.2%. Not the worst on this list, but the deeper signs are much more serious. Deltona is seeing something Florida rarely talks about: population decline. The very families who moved here for space and affordability are now packing up, with insurance premiums jumping above $6,000 a year and HOA fees spiking over 40%. Staying just isn't worth it anymore. And as people leave, demand disappears. Homes that once sparked bidding wars now sit untouched. The average time on market has more than doubled, from 30 days in 2022 to over 75 days today. That's not just a cool down, that's a stall. Investors are bailing too. Many who bought during the boom are dumping properties fast, flooding the markets with listings. It's triggering a domino effect: more homes, fewer buyers, more price cuts. Pending sales are falling apart. 1 in 4 deals in early 2025 failed to close. Between buyer nerves, stricter lending, and low appraisals, confidence is vanishing. Deltona still looks picture-perfect from a distance. But behind the shutters and for sale signs, the market story is turning grim and fast. Number 3. Ocala. Ocala was once Florida's rural retreat: horse farms, wide-open land, and homes that didn't break the bank. In 2022, the median home price was $280,010.00, and the city seemed poised for a quiet boom. But in 2025, the cracks are getting harder to ignore. Today, that median price has dropped to $255,510.00, a $24,500.00 loss, nearly 9% gone. But what's more concerning isn't just the price drop, it's everything surrounding it. Insurance premiums in Marion County have skyrocketed. What used to cost $2,000/year is now pushing $5,500.00 to $6,000.00. That's especially painful for older homes or properties just outside city limits. For many homeowners, it's become unaffordable overnight. Construction has also ground to a halt. Developers once betting big on Ocala are now pulling back hard. Entire subdivisions sit half-finished. Lots are empty. Skeletons of once promising projects are now scattered across the outskirts. And homes that do hit the market? They're sitting. The average days on market is now 80-plus days, with many sellers cutting prices or tossing in incentives just to get offers. Even the local government is adjusting. Property tax assessments are being revised downward, a clear admission that values are slipping and confidence is fading. Ocala's charm hasn't disappeared, but its housing momentum has. Unless costs stabilize and demand returns, this rural gem might be riding straight into Florida's next housing bust chapter. Number 2. Tampa. The Tampa used to be the crown jewel of Florida's real estate boom: jobs, sunshine, and surging demand. In 2022, the average home price hit $383,410.00, and homes were selling in days. But in 2025, the shine is wearing off. Today's median home price has dropped to $360,130.00, a $23,000.00 slide. That might not sound massive, but in a high-growth metro like Tampa, even small dips can signal major trouble. The first big red flag? Inventory. Active listings in Tampa have jumped by over 55% in just the last year. Homes that once sold in under 2 weeks now sit for 75 to 90 days, often with price cuts of $10,000.00 to $20,000.00 just to stay competitive. And then there's the buyer's squeeze. Mortgage rates hovering around 7.5% have locked many buyers out. First-time homeowners in particular are getting denied financing or backing out last minute. As a result, pending sales dropped 28% in Q1 of 2025 alone. Investors are also retreating. Popular short-term rental zones are now filled with hosts trying to exit. Airbnb income isn't covering costs anymore, and it's pushing more properties onto the market. The city hasn't lost its appeal, but the numbers don't lie. Between rising insurance costs, a cooling rental market, and oversupply, Tampa's real estate engine is stalling. Unless something big shifts, interest rates, policy, or demand, this city could soon be one of Florida's most surprising housing correction stories. Number 1. Winter Haven. Winter Haven was once a hidden gem in Central Florida. Lakeside charm, affordable homes, and just far enough from the Orlando rush to feel peaceful. In 2022, the median home price hit $300,205.00, and demand soared. But in 2025, that dream is unraveling. Today, prices have fallen to $275,513.00, a drop of $24,692.00, about 8.2%, but the real warning signs go far beyond falling prices. For starters, insurance premiums have exploded. Some homeowners are paying $600.00 to $800.00 per month just for coverage, more than their actual mortgage payment. That's especially true near lakes or in older homes with higher risk factors. The population trend is turning too. In 2024, for the first time in decades, Winter Haven saw a net outflow of residents. Locals are moving out, frustrated by rising costs and shrinking value. Builders who bet big during the pandemic boom are now struggling to offload inventory. In newer subdivisions, homes sit unsold. Some developers are offering $20,000.00 discounts, free upgrades, and cash incentives just to get interest. And still, buyers are walking away. Financing deals are collapsing, storm special assessments are hitting homeowners, and properties are even being listed below 2020 prices. Winter Haven hasn't lost its beauty, but the housing market is flashing every red flag. What was once a quiet, rising city is now ground zero for Florida's unfolding real estate correction.